Greetings, traders. D7 here. Standards and Poor's 500, the S&P 500, the SPX is what we're looking at here. And do we have a bear flag formation? Sure looks like a bear flag formation. Looks like it feels like it, and it smells like it. But it's not a bear flag until it in fact breaks down and proves it. So anyway, we're still waiting. I'm going to blow up here so we can take a look. We have support. 2 days ago, came down, smashed support. The next day we open next to it, shoot up, and we smash our head against the 20-day moving average, acting as resistance. And today we start breaking down, and we thought, oop, there it goes. We could drop here, and then we shot right back up. Then we came up and tagged the red line here, which is my 50-day moving average. We did a touch and drop, came right back down. Right at the end of the day, if you look at a 5-minute chart, you'll see it starting to drop. I was kind of hoping that it would get below the 20-day moving average right there, and it didn't, so it stayed here. So we're above the 20-day. We still have major resistance of the 50-day moving average, and this swing low right here, see this swing low? That happens to be precisely where the 50-day is. So that's major area. But nonetheless, look at this. We hit the ceiling 1 time, 2 times, and dropped. We hit the floor here, or support, 1, 2, 3. This thing's hanging out on the floor an awful long time. So it'd be interesting to see if we could pop up through here and head to this resistance area up over 1300, or if we close below this and everything falls apart. So there's the broad markets. There is a new member, Socialisticious, I think is his name, asking for a review of SKF, and I read that post in the forums just before I burn a video here, so I thought I would do the favor of doing a video response to that. What's nice here is we had this beautiful run up, major dropping below the moving averages, and then we have this kind of falling wedge formation, and then we break up out of that. So we're heading up now. We're over the 20-day moving average, and we are hitting our head at the 50-day moving average. So right now, the next place it should go is down. We had a run up. Now we should get a pullback here. SKF is a pro share, as you see here. It's on the financials. It's a pro share on the financials. So anyway, now I think that this will go up, pull back, going no lower than this area, maybe just to this 20-day, and then bouncing up, because we have some nice movement here in the weekly. Here's the weekly on the SKF weekly. You see this? Runs up, we get a bull pullback, and look at this. On the week, we have a higher high and a higher low, so we should continue upward here on the weekly. The weekly carries a lot of weight. So anyway, the daily should come down, maybe chop around sideways and pop up or pull back, giving us maybe a double bottom formation and then heading up. So anyway, there's my take on that, technically speaking. Let's look at Apple here. Now, as you remember yesterday, I said I didn't like that formation. It was just acting a little weird. It wasn't a traditional reversal pattern that told us that we should be bouncing up. Let's blow in here. That's a little too much. That's better. All right. So we pulled back. We popped up, but we did not have a higher high, but we did have a higher low. And it's just not a typical reversal pattern that we have here. So I wasn't for sure that we're going to head up here. So no entry on this one. Today we actually start crashing down. I thought, uh-oh, man, this thing's going to crash and burn. But now what we have is just kind of a sideways consolidation taking place. What I don't like is it's a sideways consolidation taking place on a down leg. That's no good. So this thing could do about anything. If you look at fundamentals on APL, looking into, or Apple here, AAPL, fundamentals on it, they're dissipating. They're starting to fall apart. Apple is looking very grim into the future. If you look at these analyst projections on growth rates, on future earnings per share stuff, it would not surprise me at all if this crash and burns. If I pull in a weekly chart, come down, we come up here, we've run up. Look how we stalled already. We should have moved up several days here. We didn't. It would surprise me if we started down leg, going below this area, popping down below $150. Now, I don't know when that will happen, but I think things are looking grim enough, because look at this on the weekly. We're at major resistance, and we're having a hard time getting through that. If we don't pop soon and we don't get up here past this swing high at $190, if we don't get past that, Apple's in a lot of trouble unless they come out with a new product and wow us all. But Android, Google, competitor to the Apple iPhone, is coming out. Well, they kind of done already a release to some degree, beta release. But that's going to be a major competitor to what they're doing. So it wouldn't surprise me to see this thing fall down below $150. So keep a close eye on Apple. Right now, a couple trades that I was showing you yesterday, HK, still running up. So that's nice to see that we're still moving up. It's up $1.90 I see here. Let's see, OXY. Now OXY did pretty well, just due to it popping up with that 50-day moving average. Very nice. So I'll just continue this one up as far as it wants to go. And other one. That one, you know, it's popped up over the moving averages, so hopefully that will just keep going. So anyway, there you have it. Hope everyone's doing well out there in the markets. Hope everyone's keeping their sanity, and keep a close eye, because right now I'm kind of sitting on the sidelines. I have a couple longs going, a couple shorts hedging myself, and just kind of sitting on this until we make a decisive move in the market. So there you have it. See you in the forums. Catch you later.